The other thing I'll tell you is don't do what most people do, and that is procrastinate. Most people take, all the time in the world. They wait till the very end, the deadlines, before they deal with their taxes. And for that reason, they miss a lot of stuff. So don't be that person. That's why we're doing this at the end of January. It gives you a couple months to get yourself perfectly aligned for reporting and getting your taxes paid, but doing so in a way that keeps more money in your pocket this year than last year. Hey, what's up, everyone? Welcome back to our podcast, The Freedom Factory. Excited to be here with you guys again this week. And we're going to talk today about one of my favorite, but not so favorite, I guess, topics, and that is taxes. Now, before you already say, nope, I'm out on this podcast, let me tell you this. One of your, if not your biggest expense in your entire life, like we're talking more than the mortgages on your house, more than your car payments, is the money you're going to pay in taxes. It is one of the largest expenses you're going to incur in a lifetime. So, for that reason, you should invest some of your time and energy into understanding it and understanding how to maximize what you can retain instead of having to pay. A lot of people look at the tax code as this complicated thing that the government has written to take your money. Well, you should have a mind shift on this because that code was written to show you exactly how you could save money. There are a lot of things there that people don't take advantage of. We're going to discuss one of them specifically today. You've heard me talk about this in the past, but it's one of the easiest and right in your face deductions that you can take that most people don't even know about. And even if they know about it, they're not taking it. And so right away, I'm going to say I am not a CPA. I am not a IRS tax agent. You guys should know that by now. So anything I tell you here, if you want, totally your decision. You take this conversation to the next step. Your tax person, your CPA, however you want to take it. But I'm going to tell you some of the things that we've been able to take advantage of. The other thing I'll tell you is don't do what most people do, and that is procrastinate. Most people take, all the time in the world. They wait till the very end, the deadlines, before they deal with their taxes. And for that reason, they miss a lot of stuff. So don't be that person. That's why we're doing this at the end of January. It gives you a couple months to get yourself perfectly aligned for reporting and getting your taxes paid, but doing so in a way that keeps more money in your pocket this year than last year. I will tell you guys that without a doubt, everybody should own their own business. Everybody should own their own business because it puts you in a position where you are able to pay less taxes than someone that does not own their own business. And I'll just keep the numbers real simple. Let's say you have two people that make $100,000 a year. One person's an employee, so they get a W 2. The other person owns their own business. Okay. The W 2 person at $100,000, and I should have looked up the tax bracket, but you're kind of in the middle of the tax bracket there. Let's just call it 30%. It may be a little less. I should have looked it up before I started the podcast today because the 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 numbers have changed. The brackets, that's the word I was looking for. The tax brackets have changed a little bit this year as far as how much you pay at what level of income. Anyway, you're going to pay roughly about 30%. So as a W-2 employee, if you are earning 100 grand, you only are taking home $70,000 at 30%. And so you pay taxes on the 100 grand. On the other side of the equation, you've got someone that owns their own business that makes 100 grand. But that person has a lot of things they can deduct. We're going to go over 10 things today that you can deduct that reduces that income. So let's say you have $30,000 in expenses. So you've made 100, you've got $30,000 in expenses. You pay taxes on 70 grand, not 100. The W2 person pays taxes on 100 grand. The 1099 or subcontractor, someone that owns their own business, they pay taxes on 70 grand, what's left over. And I will tell you that most business owners will pay themselves as little as possible so that they have to pay as little as taxes. And so they will expense a lot of things. So, first things first, let's jump into one of the rules that is available to all of you that you should all be taking advantage of. It's called the Augusta Rule. Fun story. It was put in place by some rich people, go figure. Augusta, the golf tournament, the Masters, right? There are people that have homes near that tournament location, nice homes. And it attracts a lot of people every year, golf enthusiasts, to watch this tournament. Well, there is tax law now that allows those people to rent their homes out up to 14 days. Now, you can do the same thing without living in Augusta, Georgia. It's called the Augusta Rule. The tax code section, just you want to go to your CPA, it's section 280A, 280A. And it will tell you that you can rent your home out up to 14 consecutive days of 14 days in a year and have a business pay you for that rental, okay? Or a person pay you for that rental. And that money that you earn from that rental is completely tax free money. It does not have to go on your tax return as ordinary income, according to Section 280A. So, for all of you that own your own home based business, your business can pay you for using your home for business purposes. So, maybe you've got meetings that you want to do at your home for your team, or meetings you want to do to recruit new business partners in, or meetings that you want to do at your home to discuss the corporation itself, like your yearly board meetings that you have. You can rent out your own home for your business for those board meetings. So anything that's business related, your business can pay you personally, and you only have to align what is ordinary cost in your area for renting a home out. So maybe it's $200 to rent a home out for a day or a night, whatever the charge is. You can go on and do some simple searches in your area to find out Airbnb and Zillow and Verbo. All these things will tell you what homes that are similar to yours can be rented for. It gives you an idea. And as long as you're in line and can rationalize the monthly charge, the nightly charge, like you don't want to, if you live in a home that would typically rent for $300-400 a night, you don't want to have a $2,000 deduction. That is fraud, and you probably will get caught doing that. Okay, so don't do that. But if you think about 14 days, man, even if it's a few $100s multiplied by 14, you're talking thousands of dollars that you can earn tax free. Think about that. Pretty incredible, right? And so, by owning your own business and knowing tax law, it puts you at some advantages. Now, let me take you through 10 things. Okay. Number one, the obvious tax deductions for your type equipment that you have in your office, tax, office supplies, the very equipment that I'm doing this podcast on right now. I bought a bunch of new stuff this year, and I had a laptop for, I don't know, 7, 8 years. It was just time, right? So I've got a new computer, new screens, new cameras, new lights, new microphone, new speakers, all of that stuff. Well, my corporation will pay for that, and I will be able to deduct that from my income. So I won't have to pay taxes on that money. A home based business has potentially a home based office. So get with your tax person again. But you can actually deduct a portion of your home, the expenses that you occur through the whole home, on a percentage of the size of your home based office. Vehicles, you can do this a few ways. So we all pretty much have vehicles that we drive around with. And by having a business and a vehicle, you're using that vehicle at times for your business, and you can write off either mileage or expenses for the vehicle. Okay, here's one you may not know: health insurance premiums. Did you know that? A self employed individual can deduct health insurance premiums for themselves, their spouse, and their dependents. Pretty cool, especially how expensive healthcare is these days. All right. If you don't own a business and you W 2'd, you can't do that. Now, some people, they strictly have a job just for their insurance. Okay. So in some cases, a W 2 does have insurance coverage, but that is not a good reason to have a job. Like if you hate your job and the only reason you have the job is because of benefits like healthcare, that's not a good enough reason, guys, because if you understand tax law and you start a business, it's paid for as well through the business. It's covered, right? Retirement contributions. All of you should be maximizing what you can do in retirement type of accounts, making sure that it's an account that gives you access to the money. I'm not talking about just locking your money away in these some of these programs, but you can contribute thousands of dollars. I'm not going to give you the exact number because there's so many different accounts, and I don't want you to say, "Well, Brandon, you said 17." No, no, go do your research, but go to the people that you're working with and ask them, for my type retirement accounts, how much can I contribute every year? And then what you contribute there from your corporation to your account is tax deductible. It comes off your earnings. Okay. Meals and entertainment. Up to 50% of this can be done. So anytime you're out trying to grow your business and maybe entertaining prospects, entertaining guests, customers, however you see it, you're able to deduct that as well. Now remember, okay, so that's number 6 on this list. All of these things I'm giving you, going back to that original example of someone that makes $100,000 a year, I said $30,000 in expenses. The name of the game is to reduce that as much as you can. So, what if you reduce it by 50% because you've got 50% in write off? Well, then you're not paying taxes on 100 grand like the W 2 employee is. You're paying taxes on 50 grand, half, half of the tax burden by owning a business and knowing the deductions that you can take. All right, let's keep going. Depreciation of assets. Well, what's that look like? Well, your equipment that you have for your business could be even your vehicles. There's tax law that, depending on the size of your vehicle, you can write off the entire value and purchase of the vehicle in year one. My wife and I did this. One of the reasons why my wife drove Ford Expeditions for so many years is it was a great vehicle for kids, lots of room. And it checked the box for tax code for a vehicle that we could write off the whole thing. So we would write, like, let's say we, you know, 40, 50 grand, because this was over a decade ago, 15 years ago when our kids were babies. $50,000, we could buy the vehicle straight out of the company's account and then write that off 100% for a business vehicle and business deduction. Number 8, your self-employment tax deductions. And so while you pay self-employment taxes, you can deduct half of them when you're calculating your adjusted gross income. So you can write that off. So you're not paying as much in self-employment tax. Here's a big one that a lot of people miss: educational expenses. So as a business owner, especially a network marketer, you're constantly and should constantly be purchasing and investing in yourself, courses, personal development stuff, those courses, the trainings, even if you have to travel to those trainings, continued education, that is deductible. So think about that, guys. You're able to take money to purchase something that's going to help your business grow, help you grow, and you don't have to pay taxes on it. I mean, that is a win-win, right? And then you've got like travel expenses. That would be number 10. So as you're maybe going to these events, or like just this past week, in fact, just a few hours ago, I returned back from a business trip. The flights, the hotels, the Ubers, the rental car, all that stuff is tax deductible out of your business. So the name of the game is to not be intimidated by the tax code. Please don't just blindly um, turn your taxes over to someone to tell them, for them to tell you what you're going to have to pay in taxes. Sit down with a tax strategist, sit down with someone, and really go through all of the things that's available to you. And you're going to learn this by asking them questions. Just go in with a list of questions like, can I deduct this? Can I deduct this? I've heard you can deduct this. Ask them about the Augusta Rule. If they don't know about the Augusta Rule, that might be an indication that you're not working with the right person. And if they don't know about some of these other things, listen, it's okay to get a second opinion. It's okay. In fact, I encourage all of you, especially if you've been working with the same person for a long time, it's worth the couple $100 consulting fee to get another set of eyes on your tax returns. Go and take your last 2 years of tax returns, give them to one of these firms to review the taxes to see if they could have found any other deductions for you. And that $200 or $300 you're going to pay them for the fee of looking over your taxes, probably they're going to find you at least that, and probably much more in deductions that were missed. So if you pay $200 or $300 to a person to look your paperwork over, but they save you $2,000, was it worth the $200 or $300 you paid them? That's a no-brainer, right? And so this is something that so many people overlook, and it's such a simple way for you to add to your net worth, because at the end of the year, if I can help you reduce your tax burden by $2,000 or $3,000, and then you take that $2,000 or $3,000 and you invest it, are you better off financially? Is your net worth higher at the end of the year than if you would not have done that and you'd have just sent the money to Atlanta, to the IRS? The answer is simple. Yes, you're in a better position. And so sometimes people think it's not, that it's only a little bit of money I'm saving. But when you multiply that over 5 years, 10 years, a lifetime, it's hundreds of thousands of dollars that you could have saved and then invested to multiply at least at 6% return. I mean, at least probably 10 to 20% returns is more realistic. And so I hope this lands well with you guys. And I hope more than anything, you take action on this podcast. Take action on this podcast. Do not just let this go in one ear and out the other, because taxes, as I said at the opening of this thing, is going to be the largest expense you have throughout your lifetime. And if you can simply manage it more effectively, lower your tax burden. And we just scratched the surface here. There's some pretty sophisticated strategies out there. Well, you've probably heard the stories where there's millionaires that are in the $1 club. Go look it up. There are, in fact, billionaires that are in the $1 club, that they literally pay $1 in income tax. And it's almost, I mean, it's a game at that point. Like that is strictly a game for them. I'm not suggesting you take it that far, but I am suggesting that you do something different than you've been doing. I am suggesting that you invest the time, the hours, to ask the questions and learn the things necessary, um, to save yourself thousands that you can then invest and multiply. Okay. And take action now, because if you don't and you wait till April, you're not going to be able to get the consultants. They're going to be busy. You're not going to be able to remember all of the things you did, because you're probably not documenting the way you should be documenting. And it probably means you're just going to write the check that somebody told you owe, based on them not knowing anything or very little about your business, and it's going to cost you money. So, like, why would you go and pay $200 for a dinner when you could have paid 120 for the same dinner? Like, that's ridiculous, right? No, that would be silly. Well, why would you pay $20,000 in taxes when you could have paid 12,000? That's all I'm saying. Just take the time, invest in yourself so that you can move your family forward. So, hope you enjoyed this one. More importantly, I hope you take action on this. Don't sit on this. Okay. Because again, I believe this is one of the biggest things that people miss, and it's one of the most simple things that they can do. So, and nothing else, go take advantage of the Augusta rule. Go do some home meeting. Go do 14 home meetings and pocket a couple $1,000s tax free that you didn't do probably last year. So, with that, guys, and have a great week. We'll see you guys here next week on the Freedom Factory.